All right, all right, all right.
Here comes the money.
Here we go. Money talk.
Here comes the money. Money, 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 money.
Dollar, dollar. Dollar.
All right. Here we are once again. Welcome back. Or welcome. Welcome each and every one of you that have made it this far. Hopefully you go the rest of the way. We shall see what we shall see. So, I decided to split the screen. And we're back with NQ. I put MNQ aside, except for actual trading. But for the purposes of looking at stuff, NQ is much better. More data equals more information, which is better. So what do we got? We got a 5-year monthly on the left-hand side here. And we got a 3-month daily on the right side here. Now we can get down into the nitty-gritty after this, but for the overview purposes, this should hopefully be fine. So, starting out with the 5-year monthly, things are spilling to the downside. And the very first post that I made over on Use ThinkScript was basically this chart, a 5-year monthly. At the time showing what it's really showing now, because the monthly chart moves slow. And that is what? At the time, it was just starting to spill over. And then we had the action this month where, brought it way down to a level, interestingly enough, if we go back to the left, ties right in with the previous top. And that's where it found support, and the buyers came in and pushed it right back up. Now the question is, what happens on the right side of this? I mean, it's the right hand that we all know nothing about. We have to wait for the future to unfold. Best thing we can do is find some divergence, and a lot of times divergence will give you a little extra ahead of time warning to, either jump in or jump out. So, furthermore, on the 5-year monthly here, talking about divergence, you have strong momentum coming in here on the anchor momentum indicator. Strong coming in up here, but you're getting hints of selling right here. The bulls push it up and the bears push it down. And what happened after that? Price kept going, so he's saying, yeah, the friggin' bull market is raging higher. But the anchor momentum is telling you something differently. Things are starting to break down here. So the higher it pushes, the more the anchor momentum is saying, get out. Get out. Hard to do when price just keeps going higher. Even worse if you did get out here because you were expecting various signals here and the price keeps going higher and you're just sitting there with tons of money left on the table. Frustrating, but you can't be greedy. You can't be greedy, because when you get greedy, that's when you get slaughtered. Bulls make money, bears make money, pigs get slaughtered. So anyway, what happens? It finally gets to a point, probably where the smart money, the institutions, the big guys, they're all bailing in and around here. They're not waiting for the top because they can't move their inventory like that. They need time to move inventory. But move their inventory after that. Just keep pushing it higher. Why? To get a lot of retail sucked in. People who are late to the party, rushing in, FOMO, whatever you want to call it. They get sucked in and then pull the ripcord. Boom. Down it comes. And the anchor momentum saying just that. Down it comes. So we had the correction of 2022, the bear market of 2022. Down it comes. So you get some indications of some buying coming in. Last push down to cement the floor right here. The floor is cemented and up we go. Time for another push. And what is the anchor momentum showing us? Pretty much just what I was saying. Came down to a point where it started basing, and then up and started working. Now the question becomes, where the hell are you getting in here? Well, if you're below, if everything's below the zero line, you just want to sit and be patient. And patience is a tough, tough thing. When you think, oh boy, I could get in early on this. Early's not going to carry it. Patience will carry you. Patience is a virtue as long as it's not going to hurt you. So there's that. But the fast line crosses the zero line. We got a little pause right here. And then boom, off it goes. Not easy to stay in though. And these are months at a time. So, I mean, the glacier might as well take time heading towards the sea. Because that's what kind of time it's going to be. It's glacial time, sitting here being patient as it goes up. But you know what? If you can be patient, you can get rewarded. But then what happens? You get a little retrace, a little counter trend rally, whatever you want to call it. It's taking a break. It's bringing it back down. Where's it bringing it down to? Pretty much probably where you got in, maybe just a couple of bucks. You notice that, hey, all that nice money I had on the way up, it's getting taken away, coming back down. But we look at the anchor momentum and what is it showing us? The slow line, the green line, has crossed the zero line. So you have both the red and the green over the zero line. That means positive price appreciation. Now it's basically doing that right at the point where the red peaks, the green crosses the zero line, right at the peak here before it retraces. So if you're getting in here, because you're seeing the chart really moving up strongly here, you're saying, damn, I'm getting in on this, and all of a sudden you're in a hole for 3 months, that's going to hurt. It's going to be very tempting to get out. And who would blame you? I mean, that's a tough spot to be in. Timing is everything. And unfortunately, the timing is no good if you're getting in up here and then you get a retrace. But what does it do? It retraces the red, touches the green, and takes off again. Up it goes. And what happened? Same thing. You got another retrace. The retrace takes it down to the green. The red comes down, touches the green, takes off again. And it pushes up it goes. Now it's easy for us to see, based on history and the fact that we're looking at the whole picture here and not just a situation where what? If I zoom in here, if I zoom in more, just trying to make a point. Okay. Now, say you're dealing with a situation where you're up here. You think it's going higher because everything's saying higher, higher, higher. Okay, I'm going to go higher. Until when? It goes lower. Now, where did you get in? Did you get in on the peak here? Bring it over here? You still have a hell of a profit. And it's on a monthly chart. I should probably be working on the 3-month daily. But I just got going on the monthly chart, so I'm just basically taking it as if it could be a 3-month daily or a 5-day half hour. It doesn't matter. It's all fractal. But just to finish up, boom. The next bar. And you don't know, based upon the fact that you're well above the previous high, you don't know that this isn't the start of a more significant retrace or reversal. So the temptation is to get out here. And you wouldn't be wrong. The red comes down to touch the green. Well, it touched over here too, and then it set it higher. Is it going higher? I don't know. That's the right side of the chart. So let's take it another month. Boom. Well, we actually got 2. So you would have been right. Except what? Look at the spread between the red and the green down here versus here versus here. That sure looks like the momentum is starting to wane, right? Green line's still going up. Red line's coming down to touch the green again. What's going to happen after that? Boom. Well, you peak. Then you have a big test here. As it comes all the way down. And the buyers say, no, push it right back up. So it ends up being, oh, what the hell? I can't think of the candle name. I mean, it's a doji, but it's not a doji because you got a long tail on it. If anybody knows the name of this particular candle, feel free to leave it in the comments. I'll see if I can look it up and figure it out. But anyway, moving on. What are we looking at? The red crossed under the green. Weakness coming in. And we're going to be coming down. Right? Boom. Up we go. Up we go. Based on what? We're diverging here. We're coming down. Price is going up. That's how people get sucked into the trap. The smart money, the big boys, they're out somewhere around here. If they got back in, they could have been down here. Still made a hell of a profit. You're talking months of movement to the upside. Let's say they reloaded and got back in up here and got out here. And then based upon whatever they're using, AI, algorithms, whatever, they're saying, maybe we'll let this one go. And the retail jumps in, starts trading like crazy. Because it's going to the moon. Maybe the moon is coming to us. Either way, the momentum's telling us, the anchor momentum's telling us. I don't know. Looks like we're coming down. What happens next? Boom. Yeah, it went up a little more. I mean, a month, 2 months worth of time. And what we get? We get a friggin' moonshot candle. It's not called a moonshot. Once again, I don't know the candle name off the top of my head. Please feel free to correct me or put in the notes what the name of this particular candle is. But what it is the buyers pushed higher, getting all euphoric, and then the sellers come in and say, coming back down. Now the anchor momentum's almost leveling out here. Maybe it does go higher. Is it possible? I don't think so. But we'll see. We'll go forward. Boom. What we get? We get a doji of sorts. Then we get another. It's not really the same. But what it's indicating is selling coming in. Selling coming in. These tails on top, selling coming in. Selling coming in. Now this, buyers coming in. Yeah, they're buyers. All retail jumping in on a ship that's about to go down, as far as I'm concerned. But it's still indicating buyers coming in, go higher. Buyers coming in, go higher. And they did go higher. But what happens down here? The red line spills over. much more significantly. And the green line is chasing after it. It's coming down. Now they're both over the zero line. So that's bullish in and of itself. So we got bearish short-term indication. Long-term indication is we're bullish. And what happens next? Boom. We kind of know what happens next because we're living it. That selling actually got accelerated here. The buyers came in. There was no pushback here. It's just coming down. Profit taking, jumping out, whatever it is, the market is coming down here. The NASDAQ 100, that is. We're not dealing with the whole NASDAQ here. We're just dealing with the top 100. And here's the latest month. Interesting how it pushes it all the way down. Now that's 16.5. I could have sworn I saw an indication of that level being where the channel came in. And I don't have the channel on here. Let me see if I throw a channel on quick. There it is. Okay. It's a lob situation. You got a screwed up channel. So it ever so slightly bends down here. It's not what I want. I want a straight channel. So let's go up to the style. And use log scale. There we go. Okay. So price can come outside the lower channel. There's nothing to say the lower channel is going to be a perfect arbiter of, price in terms of it comes down, touches, it takes off again. No, you have months of basic price action down here, forming a base before it takes off. And what do you have up here? You're reaching down. I guess it was 16, no, not 16.5. They're about 500 points to the lower channel here. They look pretty damn good. The beginning of the month, it looked like it was definitely coming down this way. And that wasn't pretty damn good. That was scary for a lot of people. Very scary. When you have your whole life's savings put in the friggin' market, because it's the only place you can find any kind of juice, you're going to be freaking out. But in any event, getting back to the chart. So we got the channel coming up here. Does it base like this? Well, interestingly enough, with the amount of buying that came back in, maybe not. Maybe this ends up being a big-ass dip. But if you ask me, it's the beginning of something. I think something much more. But that's the bear in me. Bear says, yeah, down. Let's go down. The bulls had a run. It's time for the bears to take over for a while. The anchor momentum, that's what it's saying so far. Not to say that the red line can't come down and bounce off the zero line, and the green line slowly follows after it, which means that this was one big ass dip until we get to trip higher. But lots of things can happen along the way. Say it does, based on this substantial bounce. It bounces and goes higher, but what? Forms a lower high? Oh, lower high, say goodbye. And down it comes. Or it just goes down from here. Disregards the friggin' buying that came in. Hard to say. That's why it's the right side of the chart. We don't know what's happening here. really deal with the present. The future, it's got to take care of itself. And it will, one way or the other. Just like the past. We can call them real nice based on the past. So that's a 5-year monthly chart. Now, what else did I not put on here that I could put on here just to look at? I don't think I planned on doing it. I wish I could do volume profile on a monthly chart, but I can't. Adaptive trend flow. All right. Now what do we have? The red-green line here is the mean. We got 1 standard deviation, 2 standard deviation, 3 standard deviations. With this latest move to the downside, we're between 2 and 3 standard deviations, which ends up being 95 to 98% of what could happen from a standard deviation standpoint. So this dip down, it got down into this area down here. You're close to the bottom of the channel, but you're between 2 and 3 standard deviations. That's a hell of a place to buy. It was bound to bounce. Not to say that it doesn't necessarily, but it looked pretty damn good. Because why? Because this was too much too soon. This whole fall is too much too soon. There's not a structure going on here. With the previous correction, you had structure going on. Things bouncing all over the place. But it's building structure as it goes. This, no structure, just pure falling. Bears making a lot of money. Bulls are getting it on the chin. But you know what? The bulls bounced. You came down to the red zone. The bulls bounced back up. Now, does momentum carry the bulls higher? Get your shorts on, man. Because no, that's what the anchor momentum is showing us. We're going down. We're not going up. We're going down. But a lot of people establish long positions coming in here because maybe they saw what I see in terms of the overall move was too much too soon. And maybe they made their money already and they're out. Once again, we're talking about monthly bars or candles. So what's the forecast? As far as I'm concerned, the forecast is down. And I'll stick with it. And if I get my head handed to me, it's my own damn fault. I bought something that's not necessarily the case. But I think we're going down. I mean, over here, we hit the top of the channel. We spent a year going down. Over here, we hit the top of the channel. We've only spent 4 months coming down. I think time says we got to spend more time building structure, at least around here. So we shall see what we shall see. All right, all right, all right. I don't know why that resonates within me, but it does. Just get a kick out of it. That was a great movie. If you haven't seen Dazed and Confused, do yourself a favor, look it up, check it out. I mean, depending on whether or not you're from that era. If you're from that period of time, it's a nice way of reminiscing. But for anybody, I thought it was a pretty good movie. But anyway, I'm getting off subject here. So that's the adaptive trend flow and standard deviations. and where things stand. Anchor momentum, standard deviations. How about support and resistance? You got any support and resistance? Let me see if I can throw something up there. Why am I not seeing it? Got the pivots, but I don't have. Oh man. I'll try the pivots for a second. I don't want to annotate the living hell out of this chart and all of a sudden you can't see anything because there's just so much garbage on it. Not garbage, but you know what I mean. There's just too much on there. So what do we got? We got pivots. Is it showing anything worthwhile? Well, interestingly enough, the S2 to S1 pivot throws a trend line that shows, boom, break between these 2 months here. This one's coming down. It's got to come up, get back into that, above that line. I don't think so. I just think we're going down. Interesting enough, the R1 became support over here. Price came down, hit that support, went a little further, and then bounced. So there's that. But I'm just a little frustrated because I can't find what I'm looking for. There we go. That's what I'm looking for. A little programmatic support resistance. And we got to dial in the right information. We got week and a month. We're going month and quarter. Interesting. The magenta line here is resistance. It breaks through resistance, comes back and tests, and moves on. Now you carry that resistance forward because it's now support once it's broken through and tested. And that's exactly what happened. It came all the way back to test. Then I would say it passed the test because it came down, didn't close below, came down, bounced back up. Still support. But I still think price is coming down. It's going to test that again. The anchored momentum's telling me we're coming down. The support and resistance, the resistance is saying you've got support. You're in the red zone. The second to third standard deviation. You got the channel coming up. There's a lot of confluence that says this area right here. And that's what unfortunately that first post that I had that didn't transfer into these little videos that I'm making. But it is now. On a monthly chart. You got a lot of support going on here. But this candle's standing on one leg. And how long can you stand on one leg for? I know I can't stand a long time. It's time to either put another leg down, find support there and bounce, or come down and realize I've been standing on one leg for the whole time, I'm going to fall. And who knows how far I fall. Or how much time it takes being on a monthly chart. And where's support? Well, support is the yellow line down here at 14 and change. And you have another support down here at 10 and change. Long, long way down. We shall see what we shall see. So that's a monthly. That's like the grand overview. You know, I don't know many people that trade monthly charts, but it's good to look at. It's good to get a sense of what's going on. And what's going on is we've got a hell of a correction going on. And there's more to come. So I titled the last video, The Calm Before the Storm. And things are pretty calm. Why? Because we bounced. People are breathing a sigh of relief. Oh my God. You imagine I came back from down here and I'm back up here. Whew. You breathe a sigh of relief. I don't think so. But we shall see what we shall see. So let's go over the daily a little more. A little more pertinent, I guess you'd say, to the overall situation. Although I'm glad that we did the month. And if you made it this far, I'm glad you did, because I think it helps when we move into a daily. And the vast majority of people are probably day trading as it is. Just because you can't necessarily afford. I mean, NQ is $20 a pop. So each point that it falls, you're looking at $20. That's some juice. Talk about juice. That's leverage, man. That's not juice. But they call NQ the widowmaker, and rightly so. You gotta have a pair of steel cojones to trade the NQ. That's why MNQ is a lot more popular. That's why I'm on MNQ. I was trading the NQ. But I went through drawdown. And I had to be smart enough to get out and deleverage. And deleverage down to the MNQ. So on to the daily we go. NQ or MNQ. Take your pick. The chart's going to be the same. The only difference is the amount of leverage. So what do we want to put on here to look at? Well, the first thing is my channel. I'm not seeing my channel. So I pop that on. And what do we got? We got a log chart again? Yes. Let's straighten the channel out there. Now, looking at a daily chart coming from the monthly, all of a sudden the channel pointing down like this. It doesn't look like we're going up, does it? Doesn't to me. I mean, price came down, crossed the 233 EMA. Exponential moving average, 233. Not 200. No, 233. And the reason why? Crossed, came down, weak rally to the upside, and what happened? 233 just shut it down. Bam. You're on the wrong side of the 233 there, fella. And down it comes. And it fell. I mean, significant amount. We get a little weak kind of trend rally here. But after that, lower high, say goodbye. Bam. Down. Outside the channel, you're basing. You're looking to push upwards. Now you're pushing up against gravity. But you still got a major goose right here. Woohoo! Goose to the upside. Big time. But you know what? That was a perfect chance to get out. And if you didn't, which I didn't, because I'm a thick-headed, friggin' Irish-American numbskull. Didn't get out. And now it's having troubles. And it looks to me like the Bears are winning. You got bigger down candles, they had bigger up candles. Plus, the anchor momentum, all below the zero line. Even with that big push to the upside, didn't cross the zero line. And you did get across the zero line here with the red line, barely. And what was that? When it hit the ceiling on the of the 233 EMA. So where do we go from here? Hard to say. It's the right hand of the chart once again. But what do I feel is going to happen? We're going down. Now, what would I hope? For everybody's sake, we come down to a higher low. Higher low and off we go. Lower high. Say goodbye. So, I said way back when, somewhere in this area here, get your shorts on. And I still feel you could have your shorts on. Keep your shorts on. What was that quote? I think Mr. Buffett said it. When the tide goes out, you see who's naked, or something along those lines. Basically, the people that are unprepared when the tide goes out. When the tide comes in, everybody's happy. So everybody gets to swim around and have fun. Tide goes out, there's no water anymore. You're not swimming. You're left there naked. Unless you got your shorts on. Okay, so what else do we want to put on the chart? Let's see. I'll put the adaptive trend flow again. And what is it showing us? Well, the first thing it's showing us is we're all red. Even with the big goose in the market, whoo, still red. And we're looking for green. Ain't gonna find it, not right now. Things got so oversold that you're outside the third standard deviation, which is 98% of the price action. This is not something that happens every day. And if I was smart, I was looking at this when it was happening, buy the hell out of this, even though it's all red. Buy the hell out of it, because it's coming back to the mean at least. And mean reversion people know what I'm talking about. Trend following, not as much. So how about some support resistance? And let's get it set up properly this time. We'll go with a day and a week. All right. It's showing overhead resistance here. And sure enough, that was the end of the run for the bulls. But this still had support coming in down here. You have confluence of support. And what do you have? Broken. Bam. Retest. Broke it again. Bam. Down you go. Come to another level of support. Looks more reasonable. Come to resistance. Right at that 233. You got resistance indicated. Wasn't going past there. Sure enough, it didn't. Down it comes to support. We got support. We tested. We're okay. We move up higher. Then the selling kicks in. Punches the friggin' floor out. Bam. Down you go. So current support down at 16,460. Is that going to hold? Well, I'm looking more at the fact that we're at 19 and change right now. 19,005. That's a long way down to support. And if it were to fall really quickly, down to support, we'd be out the bottom side. The third standard deviation on the downside. So that would be another place to buy. Now, psychologically, if you were in at 19 and now you're down at 16.5, you're looking at what? 2,500 MNQ would be $5,000. So you're talking 50 grand on NQ. Whew. Gets a little rich for my blood. But that's support and resistance. That's the adaptive trend flow. That's the anchor momentum. That's what we're looking at. And if there's anybody out there that happens to stumble across this video and watches it, I hope you get something out of it. I hope it helps you. If you happen to think that you're going to trade NQ, I wish you all the best. If you're going to trade MNQ, I wish you all the best. But one way or the other, you got to trade it. Because the other side of the coin is to not trade. It's to just be like deer in the headlights. And that's not where you want to be. Now, when the headlights belong to a Mack truck. And we're 42 minutes into time flies when you're having fun. I don't know how compelling this video is going to be for people, but I put it together anyway. Helps me see the overall picture. Maybe next time I'll zero in a little more. Won't go way out like I tend to do. Like the previous video, I was out on the quarters. I was looking at everything in terms of quarters. Business runs on quarters. You got to report every 3 months. Makes sense to me to look at it from that standpoint. But it's stretching things a long ways out in terms of actually things happening. And when most people are, I shouldn't say most people, but a lot of people are dealing with 1 minute chart, 3 minute chart, 5 minute chart. I've dealt with that, trying to somehow shave things in such a way that I wouldn't take any losses whatsoever. Loss is the name of the game. Being able to take loss, if you can do it, that's the way to go. We lose a lot in our lives. We lose people we love. We lose our own lives. So we got to make the most out of what we got and make the best out of what relationships you have in your life. Once again, I'm on the soapbox. I don't know, I keep finding myself jumping up on the soapbox. I'll stick with price. Price action, order flow, all sorts of good stuff. So that's the story. I'm going to stick to it. We're 44 minutes in, and I'm going to wrap it up. So if you happen to stay this long with me and go through the journey here, I thank you very much for doing so. I do appreciate it. This gives me some validation for the time I put in to create these things. And a person left a comment. It was really nice comment because he was saying thanks for the book recommendation. I get absolutely nothing out of it other than the fact that I think it's really cool if I could help out. If you're having some troubles trading, it's an excellent book to read. The Mental Game of Trading by Jared Tendler. Let me just check that title again to make sure. The Mental Game of Trading. A system for solving problems with greed, fear, anger, confidence, and discipline. By Jared Tendler. It's on Amazon. If you look it up, I should put the book in the show notes. That way everybody has it. I'll put the link too. I'll work on doing that. So, once again, it's been fun, and I look forward to going forward, because I certainly am not looking back. All right, good night.